Hello everyone, welcome back to our midterm quiz review for 5512. Now it's week 4. Equity market 2, equity and investors. Let's continue. So the first one is our booking textbook outlines. Sorry, my bad. Forget to open WeChat for the screen card, but we can find here. So the share market investors, buying and selling share factors to consider for an investor. Return, systemic risk, unsystemic risk, beta, active is passive investor, direct and indirect investor, share market index. So we just close it. Sorry for that. Taxation discussion and calculation, dividend, classical imputation, Franklin credit, capital gains or loss. Yes, that's good. The capital taxation discussion is very important. And the next one is pricing of share. In this chapter, we involves lots of calculations. So I'm considering to divide this part to two videos. So to continue, the first one is the constant dividend model, constant dividend growth model, dividend events, bonus is share issue, share split, pro rata, right issue, and next is the share price forecast. The two methods, the fundamental analysis, top-down approach, bottom-up approach, and technical analysis. Next one is series on the determination of price change, the random walk through hypothesis, random walk hypothesis, efficient market hypothesis, and the behavior finance hypothesis. Correct. That's book outline. Next is the vocabulary. We can find that the first one is the price discovery, market confidence, beta, active investment, passive investment, expected return, portfolio variance, diversification, asset allocation, discount broker, full service broker, direct investment, indirect investment, for ranking, growth stop, marginal tax rate, dividend imputation, cum dividend, x dividend, bonus issue, share stock splits. Did you remember the splits in the 5546? It's weird. Bear market, bull market, stock market index, market indicator, fundamental analysis, and then the technical analysis. Moment. So what's that?
Momentum.
Constraint. Okay, just delete them. Sorry for that. Just delete them. The row. Yes, know that I changed Chinese version here because it's I don't know why. This day there is an urgent update of the Microsoft Voice, and then it goes to Chinese version. I don't know why. Maybe I can change it back later. So let's go. Same method. So I mean the first one would like to be, sorry for that. I mean the first one, the price discovery, triple click. Sorry for this. Is the processing by which market price determines supply demand interactions, by which market price is market confidence, is the leverage trust investors have the financial market economy. Beta is the a measure of stock sensitive to overall market movements. The rated system rates active investment is investment strategy where investors actively select securities to outperform the market. The passive investment is investment strategy that trades a market index rather than trying to beat it. Trades the market index rather than trying to beat it. Expected return, the anticipated return on the, sorry for that, cannot cover that. Anticipated return on the investment based on probabilities of possible outcomes. Anticipated return, expected return, the same in the same. What do you mean? And the portfolio variance is a measure of the risk of portfolio based on the variation return. Portfolio variance, and with this, so diversification is strategy spreading across assets to reduce risk. Diversifications wise. Next one is the assets allocation. Is the process dividing investment among the assets classes. Stock, bonds, discount broker is a broker that offers low cost trade execution with limited advisory service. And the full service broker means the broker will provide advice, research, and portfolio management service. Investing direct finance assets. Direct finance, yes, we have discussed that before. I have the impression, I still have the impression now. The next one is investor intermediates. Multi-fund ETF is the indirect investment. Next is franking. So yes, next part is a little bit more important because there is not to terminologies with that I did not know. Yes, let's go. Franking develops a system which company taxpayers attract to the a system where company taxpayers attract to dividends as a tax credit for shareholders, and grows up. Where company taxpayers attach to dividends as a dividend credit for shareholders. The process of adding back the franking credit to the cash dividend to reflect pro-tax income. Margin tax. So this I need to. Sorry for that. I need a further explanation for this. The tax applied to the last dollar of individual income. The tax rate applied to the last dollar of the individual income, and the dividend imputation. a tax system that avoids double taxing by passing company tax credit to shareholders. Yes, still don't know. Curious for that. Current dividend. Current dividend buying a share with the right to receive the upcoming dividends. X dividend is buying a share without right to receive the next dividend. Bonus issue is a free bond, free additional share given to existing shareholders. Split, stock split. Share split is dividing into more shares to reduce the price value. Bull market is the where price rising. The bear market continues. The market condition where price falling, and the stock market index is a measure of performance group of stock. For example, 500. Market indicator is a standard index used to assess market performance or trends. Fundamental analysis is used to assess market performance, not fault. This one, evaluating a company based on financial statements and economical factors, is fundamental analysis. Next one is technical analysis, analyzing pattern and flow. Sorry for this. Analyzing pattern in the charts to predict further movement. Yes, I've learned that before.
Momentum.
Momentum are investor strategy that follows trend. Momentum follows the trend. Momentum. Interest. So what does that mean?
Contrarian.
Contrarian. I invest in that goes against market trend. Yes. For this 5, make a further explanation for the above pictures with example to I do not fully understand what happened. Okay. I think that'll be great. Next is the lecture note. Sorry, GPT is confused about the picture I posted before. So what's wrong with you, GPT? So should I post the picture one by one? Let's go one by one. Make further explanation for both example. I do not understand what they. Yes. Maybe we have got. Oh yes, franking. Franking committee already paid in its passing you, so you don't get tax twice. Right? Yes. Company earn profit, pay tax. You share dividends, pay tax again. Ah yes, it's a franking. For last example, company profits, company tax 30%, resuming profits 30%, $70 pay you as a dividend. So you receive cash dividend 70%, $70 and $30 of franking credits. Oh yes. You must currently receive the full predicted return. Gross up dividends, cash dividends, and franking credits. Using the same example, you declare $100 income, not $70. Your tax rate is 30%. So if you if you tax if you tax rate is $30, you are supposed to pay $30, but you have paid that before in the company, so you do not need to pay extra tax. But if your tax rating is 45%, you tax it, you tax it, your taxes, your taxation is $45. You have paid $30. You only need to pay $15 in extra. That's correct. So I got what that means. So next one is the sorry for that. Dividend imputation. Dividend imputation, the whole tax rate, the whole tax system. What does that mean? Company tax is passed to shareholders, so profit and not taxable twice. So that's the same example. Your gross up income is $100. Imputation is assigned tax to someone here. Company pay tax and the tax imputed to you. Oh, it's a very terminology expression. So let's go. Chapter 4. You can mark it to lecture notes. Yes, there are lots of calculation here, so I need to make some tips here for the notes here. So let's go. Yes, in equity part, the equity fund alternative, the right issue replacement, dividends, reinvestment schedule, preference share, convertible notes, common issue option, and equity warranties. I mean, we did not explain these six in detail. We have explained these 60 in detail in chapter 3. Yes, in this term we need to calculate the detailed. So that's chapter 4. Yes, detailed calculation of them. Share market indicators that perform the group of stock, active investment approach, passive investment approach, balancing share, direct investment, indirect taxation, imputation. So let's see example for here. The net income after tax $70, and the personal tax rate is 45, and the divided franking credit $30, $15. So actually we receive $55 because as the whole company and give the tax to you because the 45 applied correct price of the. So let's see the pricing of the shares. Pricing of shares. So the first one we see that is the constant valuing share with constant dividend. And the picture, we can get a picture here. The price is the dividend divided by the interest rate with constant growth. If there is growth, what happens? Excuse me. Okay, let's go. That seems to be the most easiest and seems to be the easiest method calculator. Price of shares. So let's see the current dividend and ex-dividend shares. That's the most that's a very simple one. The next bonus share issue. The bonus share issue is applied. Sorry for that. When yes, we can use function. Next one is share split. Just divide the split amount 5 in 1 divide 5. And pro rata right issue, it means that the share issue, the discount, we just need to calculate with the following methods. Sorry for this, just copy the amount we are supposed to use. And the share price movement, top-down approach, fundamental analysis, macro and the macro, bottom-up approach, technical analysis, and the hypothesis. And in the effect market hypothesis, we need to know that there is weak form, semi-strong form, and in this strong form we just need a picture here. The picture here is enough for the explanation. Yes, I think that's all about that. So let's make a further explanation. For the traders may have access to new information, begin to review that information by the effect on price. Perceiving a trend, other market participants may transact in attempt to prefer profit from the new information. Must also be weak from asset price and react immediately to release of new price. It should refer private information or information known only to the select group of participants. Yes, that's all about week 4. Goodbye.